All right, I came in this morning, Monday. It's the 13th of June, and the market was getting destroyed. It really sold off hard. It's come back off the lows, but the S&P is still down 2.5%, and the Nasdaq is down about 3%. So once again, this sell-off continues. The good part is that all those puts that we had put on over the last couple of weeks. Now, the month of June was kind of shaky for me because the market really didn't have a big direction. And today, with this massive downside direction, I have the good till cancel sell orders in there, and it was just order executed all morning. So we definitely took a lot of profits. I had to take a double take at the metrics for this month, which were pretty abysmal. But then today, you can see here, we did about 46 trades for the month of June. Booked about $90,000 worth of profits on $196,000 that we put at risk. So I know it's early, we're halfway through the month, and this number is probably going to level off, but we're at 46% return on the money that we had put at risk, and 57% profitable, 43% unprofitable, but that profit ratio is 3 to 1. So all those long puts that we put on, we're taking in excess of 100% returns on. So I will say that's good news in a market that doesn't offer anything in the way of good news. So let's take a look at what we got going on. Okay, here's eBay, ticker symbol EBAY. So we had went long puts. We did it on June 1st. These we bought the July 15th $45 strike price puts. We paid $1.52, and today we unwound them, sold them for a profit, $3. We got for them, and that represents about a 97% return on that trade. All right, here's KLA, ticker symbol KLAC, right? And we had went long the puts on the June 1st. We had bought the August 19th puts, $350 strike price. We had paid $27.14 for them. And today, sold them for $40.20, which is about a 48% return on that trade. All right, here is Newell Brands, ticker symbol NWL. We went long the puts here on the 1st of June. We had bought the July 15th $20 strike price puts. We paid 75 cents for them, and today we unwound them, the entire position, for $1.60. That represents about 113% return on that trade. All right, here is Accenture, ticker symbol ACN. So we went long the puts here. We did this trade on June 7th. And these were the July 22nd puts, $300 strike price. We ended up paying $12.60 for them. Today, I sold them for $25.50. That represents about 102% return on the trade. All right, Wix. What's going on with this stock here today, right? So here's Wix.com, ticker symbol WIX. We had put this bear put vertical on. Never fight that trend, right? We went, we took a downside bias on it. Today, the stock is down 3.7%, below our threshold of profitability. So we went ahead and we unwound this vertical this morning. So here's Wix. We did this trade on May 24th. So we originally sold the June 17th puts, $55 strike price for $2.09. And then we went ahead and we bought the June 17th puts, $60 strike price for $3.90. And today I bought back those puts for $3.10, and then I went ahead and I sold the other puts for $5.80, and all in, that represents about a 49% return on that trade, on that vertical. Okay, so here is Gartner Group, ticker symbol IT, getting absolutely hammered today. It's down about 4.4%. You can see here we went long the puts as this thing was turning over, and the past 2 trading days has just been something miserable for this stock. So here we have it. We on the 7th of June 7th, we went long puts, and we bought the July 15th $260 strike price puts, and we paid $9.49 for them. And today we sold them for $24.10. That's about 154% return on that trade. So very successful trade in a very small amount of time. So yeah, I'm real happy about that. Okay, here's Oracle. This was one of those unusual option volume activity trades that I was experimenting with. Now this did not work out well at all. So I had went long the calls. I did this on the 6th, June 6th, and I went the near dated calls. $74 strike price. I paid $2.30 for them. And Oracle, you'll take a look at the chart. Oracle has just been hammered over the past 3 trading days. So this is going to be a loss. So I'm trying to unwind it to try to preserve some of my capital in this. I'll probably get out by the end of today. These are expiring this Friday anyway, but let me see if I can salvage a little bit. So I have the order in there. I only managed to get off a portion of the trade, but bought them for $2.30. I managed to buy some, manage to sell some today for 32 cents. So, you know, I'm going to lose almost all my money on this one. Okay, here's Ecolab, ticker symbol ECL. Went long the puts here. You can see this stock is down 3%. It really had a lousy couple of trading days. It was nice. We went long the puts here as this MACD was curling over, and it really paid off for us. So here we have the ECL on June 7th. We went long the puts. These were the July 15th 165 strike. We paid $5.25 for them, and today we sold a batch for $11.40. That's about 117% return on that trade. Here's Costco. Costco, we went long puts. You can see here it was bumping up against its 20-day moving average. The MACD started rolling over, so we went long puts. It paid off this morning. It dipped down below our threshold of profitability. It has since come back. Looks like the market is off the lows here, but we went ahead and we unwound this trade. So on June 8th, we had bought the July 22nd puts, $470 strike price. We paid $18.75 for them. And today I sold them. For $30, so that's about a 60% return on that trade. All right, Starbucks, same story. So here's a stock that's been in the downtrend, came up, tested its 50-day moving average, which is sloping down and acting as resistance. The MACD was rolling over. We went ahead and we went long the puts here, and the stock is down 3.5% today, off its lows, but still below our threshold of profitability. So I went ahead and I took profits on this position. So you can see here on the 7th of June, we went ahead, we went long the puts. These were the July 22nd puts, $78 strike price. We paid $3.20 for them. Today, I sold a batch for $6.50. It's about 103% return on that trade. Ringing that cash register today, baby. It's great. Okay, here's Lowe's. Lowe's continues to go lower and lower, right? So this thing is clearly in a downtrend. It's been hitting its 50-day moving average and its 20-day to the, acting as resistance here, clearly in a downtrend. As this thing started rolling over and approaching its 50-day and the MACD started rolling over, we went ahead and we went long the puts here. Stock is down 2.4% today, so we had some profits in it this morning and we took it. So with the Lowe's on June 8th, we had bought the August 19th puts, $190 strike price. We paid $10.55 for them, and today I sold them for $16.55. That represents about a 57% return on that trade. So get this. This was Apollo Global. So we did this a while ago. When did I do this trade? I did this trade here on May 26th, right? So which is right around here. And it came up and it was testing its 50-day, and I thought it was going to roll over, and clearly it didn't, right? So this thing just shot up. I think I did a couple of videos where I was like, I think I lost all my money on this one. And it was just kind of meandering up here, started rolling over again. I didn't do anything, but boy, the last 3 days, it took a beating, and today is down 8%. So what turned into a loss where I was going to lose all my money is now a gain. So a little bit of patience on our part, but it's paying off. So I'm trying to get rid of the entire bear put vertical today. I managed to get half off. I got the other half in queue pending, but I'll most likely get out of this trade in its entirety by the end of the day. So let's take a look at what we did. So here's the pair put vertical on, as I mentioned, on May 26th. I had sold July 15th 47.50 puts at $1.01, and then I went ahead and I bought the July 15th puts 52.50 strike price for $2.35. Now this thing, I was out of the money for the longest time. I was about to write it off as a loss, but now today, with the action of the stock being down so much, I was able to sell half of that position. So I ended up buying back the ones I sold for $2.25, and then I ended up selling the ones that I bought for $4.25. I unwound half of that position. I actually made 36% on the trade. I'm very, very pleased, because that was something that I was about to write off as dead. But here we are, taking profits. So you never know. Market is always exciting. It's a new day every day. Okay, here's this bear put vertical that I did on Clorox a while back. I had taken half the profits off, and today I took the rest off. I closed it out. I think this was actually coming due for expiration this Friday. So I said, you know what? I got the profits there. Let me take them. So we had taken profits on the first half. This was on June 10th. Now today, on June 13th, I closed out the remainder of this position. So we originally, on June 7th, we had sold the June 17th 128 puts for 89 cents, and then we went ahead and we bought the June 17th puts, $133 strike price for $2.40. And today, I bought back the ones that I sold for $1.65, and then I went ahead and I sold the 133 puts for $4.23. So in the end, I made about 71% on this vertical on the way out. Very nice. I'll take it. Okay, here's EBIX, E-B-I-X. This was one of the unusual option activity that we had. So there was a lot of put buying. So we went long puts as this thing was rolling over. Had some unusual activity to it. And you can see today, over the past 2 days, this thing has just been absolutely smashed. It's down about 7% today after being down a ton on Friday. So we're long the puts here, and it's paid off, so I took profits. So we had bought, this is on May 31st, we had bought the July 15th puts. This was the $25 strike price. We paid $1.90 for them, and today I sold them for $4.10. That represents about 116% return for EBIX. Okay, here's Match. Very similar to the pattern that we've been following. Here's a stock that's been in the downtrend. It's been hitting its 50-day moving average, acting as resistance. It came up here, started testing the 50-day again. The MACD histogram was rolling over. So we went long puts here, and you can see the stock is down about 6% today after having a miserable day on Friday. So hey, we're taking profits. We're taking profits on the way down. All right, so Match on June 7th, we went long the puts here. These were the July 22nd, $82 strike price. We paid $5.70 for them, and today we blew out for $11.40. That's pretty much a 100% return on the money. Okay, here's Bank of New York. BK. I had put this bear put vertical on a while ago, and I was just about to write it off, but you know, it is trending down. It hit its 50-day. It's rolling over. You can see over the past few days it's had a miserable day. So we had some profits. So we ended up closing this position out. Okay, so yeah, we had this on for a while. We actually did this trade on May 10th, a month ago. So the first batch we took profits right away after 2 days, and then I've just been holding the second batch. So today we were able to close out the entire position. So on May 10th we sold the June 24 puts, $43 strike price for $2, and then we went ahead and we bought the June 24 $44 strike price for $2.48. These were both puts. And then today I ended up closing out the entire position. And it looks like here I bought them back for $1.65, and I ended up selling the ones that we had for $2.63 and $1.85. Yeah, that's right. So it's looked like we made about 123% return on this vertical, at least on the second half. The first batch we made about 102%. The second batch we made about 123%. So all in all, this Bank of New York put vertical was really successful. All right, here's Fortune Brand. I actually, so when I recorded the video on Friday, this was actually executed after I had finished the video. So this was actually executed on Friday. So I went long puts here. We bought the July 15th $70 strike price puts for $3.30, and on Friday I sold them for $5.60. Represents about a 70% return on the trade. I'm sure if I would have held it today, I would have made more, but can't look back, right? No shoulda, woulda, couldas here. I ended up booking that profit. Okay, so call me stupid. I actually bought calls on the SPYs. So it was down really bad this morning. We were talking about almost a 4% drop. So I bought some near dated calls on the S&P 500, the SPYs, just for a quick trade. Let's see if maybe this afternoon we can get a little bit of a rally, or into the week maybe we get an up there. So I'm going to take a very quick profit on this, but I'll show you what I did. I went long calls, so I went ahead and I bought the June 21st 380 strike price calls, and I paid $7.26 for them. I'm down a little bit in them now, but again, this is going to be just for a very near-term trade, because I just think that this is a really, I might even be out by the end of today, but just a very oversold market that we walked into this morning. So I was thinking maybe there's a little bit of bounce, and we are off the lows, significantly off the lows. So let's see what happens. Here's PG, Procter & Gamble. So I put this bear put vertical on. You can see here that this thing is trailing lower. It's 20s below the 50. They're both heading down. This thing is rolling over. The MACD just went negative. So it doesn't look pretty, right? I'm expecting that this thing might follow through and continue to fall. So to take advantage of that downside bias, I went ahead and I sold the June 24 puts, $135 strike price for $1.33, and then I bought the June 24th $140 strike price puts for $3.03. So I took a lot of profits. You can see I took a lot of the downward bias stuff off today. So I went into today with a much greater downward bias, but you can see here after taking all those profits, I got this portfolio back to 31% downward bias, 62% upward bias, and 7% neutral. So I will be on the lookout for some more downward bias opportunities, but for now, let's see how this plays out. Okay, that's all I have for today. Let's see how this market reacts towards the close. Have a good rest of the week.